Welcome to all my young investors, man. It's just good to see you guys again. I am excited to bring y'all none other than a great company that I think is a great buy right now. You guys need to go ahead and jump in and start buying fractional shares on this one. I'm going to take you to the charts a little bit later, but we're going to talk about the company, the big power billion-dollar company that we need to be looking at that's right under the radar. And I think it's just a great buy. That's none other than Meta. Yeah, Meta. Yeah. Its core Meta platform builds and runs social and communication rails of the modern world. Yeah, Facebook. Think about it. Instagram, WhatsApp app, Messenger, and is pushing hard into the next computing platform with reality labs, VR and AR, Quest headsets. Yes, talking about the big company Meta that you guys can get at a great deal. I'm gonna show you why it's a great deal when we get into the charts in just a little bit. Okay, Meta is an AI infrastructure that sits behind everything from content ranking to generative tools for creators and advertisers. This is a company that monetizes attentions at global scales and is now layering AI mixed reality on top of that attention machine. And whenever I get into a company like this, guys, I always like to talk about the balance sheet. Yeah, we need to know something about the balance sheet as young adults. Meta is sitting on a massive liquidity pile. Yeah. As of the latest trailing period around March 2026, they had roughly cash and equivalents about $23.8 billion. Y'all know I like companies with cash. The short-term investment is 57.8 billion. Their total cash plus short-term investment is roughly about $81.2 billion. My young investors, this company ain't going nowhere. You understand me? This is the type of company that you guys need to be buying fractional shares in. This is not financial advice, but if I was a young investor getting into investing, this is one company that would definitely be in my portfolio. Okay. Uh, that type of fortress, the type of money they got sitting in their cash position, is enough to fund capex, buybacks, and aggressively AI infrastructure. That's exactly what they're doing. They're building out AI infrastructure at this time. And they're building it out without even blinking an eye because of how much cash, hardcore cash, they got sitting on the side. I just love it, you guys. You like the video, like and subscribe, but this is a great company. The total assets is around 395 billion. Did I say 395 billion? Yeah, their total assets around 395 billion, heavily invested in property, plants, equipment, data centers, servers, networking, and AI computing that powers their ad engines and future metaverse. Yeah, metaverse, okay? This company is very ambitious, okay? And then I don't like to just give y'all the cash side of it, but I like to talk about their debt. Their debt is about 86.8 billion, including long-term debt and lease obligations. Their long-term debt is about 58.7 billion. Their total liability is about 156 billion. Their shareholder equity sits around 243.7 billion, giving Meta a strong equality cushion and high book value per share. Okay. Why a company this rich is still carrying debt? Yeah, sometimes when you look at a company as a young adult, we want to know why they're carrying debt. Well, Meta isn't holding debt because it's desperate. It's holding debt because it's what you call strategic debt. Yeah, cheap capital with strong cash flow and high credit uh, equity rather. Meta can borrow at relatively low rates, preserving flexibility while still returning capital via buybacks and dividends to their shareholders. A company like this has no problem borrowing money from banks. Yeah, they're dying to give a company this big and this great money. Their tax efficiency, interest expenses can be a tax advantage, making a mix of debt and equity more efficient than a purely debt-free balance sheet. Yeah, they buy what they want when they want to buy it. Shareholders' returns, uh, you know, they look out for their shareholders, giving us great returns when you invest in this company. Because debt plus cash flow supports large payback programs, which shrink the share count and amplifies the EPS growth, earning per share. Yeah, they amplify the growth and the earnings per share. This is not, we need debt to survive. It's we use debt to optimize our company. Why Meta is a great company? Well, for one, I want to say to my young adults out there, again, this is not a financial advice, but this company is simply a cash machine. Revenue north, think about it, of 200 billion with net income over 60 billion in the recent year. Insane profitability at scale. Yeah. Why this is a great company? Well, global rails, billions of users across the apps, advertisers must be there if they want to reach. Yeah, if you want reach, yeah, you're going to have to go through Meta to reach the millions of people that you want to reach if you got a business. That's what you call a company having durable demand. Yes, there is a demand for this company. Why do people say that Meta is a great company? Well, AI leverage. Yeah, every improvement in AI, better targeting, better ranking, better creative tools drop straight into higher ad efficiency and margins. This company is a company, you guys, that have great margins. And you guys know I love talking about margins. Okay? Their balance sheet strength is huge. massive liquidity, and still room to lever up more if they ever wanted to. Yeah, this company is not at the end of the line. They still have room to grow. Yeah, Meta is a great company. And you guys, we're gonna get into the charts in just a little bit, but I just want to say what the bulls have to say about this company. Then I'm gonna tell you what the bears have to say, and we're gonna go ahead and jump into the company. Okay, we're gonna look at the charts in just a minute. Okay, the bulls say that this is a dominant ad platform with room to grow. Yeah, they're already dominating the ad platform, but they still got a lot of room to grow. You guys got to think about it. These other countries is coming online. Countries like India, okay, be coming online. The bulls also say that Meta's AI is a force multiplier. Yeah, they're a force multiplier. From offline to online, every new tool for creators and businesses, Meta is in charge of. I want you to think about it. Reels, shops, AI tools depend the most on the moat that AI has and that Meta controls. Yeah, Meta has a moat. And some of you guys don't know what a moat is. A moat is something that you do that nobody else can do. Okay? Meta have large language models or advanced artificial intelligence system designs to understand processes and generate human-like text. Yeah, Meta is so far advanced that they're even beginning to generate human like text. The robots is soon coming alive, and Meta will be leading in this area. Metaverse. And even if Reality Labs is a money sink today, bulls treat it as a long-term call option. If VRs and AR are speculative computing hits, Meta also owns the platforms, devices, and the ecosystems for the future. Okay? The bulls say that their capital returns and balance sheet with tens of billions in cash and strong free cash flow, the bulls love the payback and the potential for growing dividends, all while the company still invests heavily in the future. And I kind of agree with the bull's perspective. This is a great company. The bears say, though, on the other hand, uh, regulatory and political overhang could happen. The bears focus on antitrust risks, privacy regulations, and potential limits on the data usage and the targeted ads that Meta produced. Yeah, the bears say that Metaverse burns money at a high rate. You know, talking about their reality labs, they say that they're just burning through more money creating these reality labs. But whether you not like it or not, robots is the future, okay? And reality labs is here to stay. The bears see this as a distraction and a capital drain. That's what they say. Okay, so and the bottom line to all this, too, I want to say to all my young adults, meta is, on just my opinion. I'm going to get into the charts in just a little bit, but meta is what I call a cash rich machine. Okay? Right now, they're spending a lot of money on infrastructure, and because they're spending a lot of money on infrastructure, the stock has kind of, for the last year or so, I've been watching it. It's been kind of been going down, but I think it's at a point now that pretty soon is going to turn back around and start going back up, because I'm going to show y'all the charts and the fear index in just a little bit to show you why I think that this is a great buy for young investors to start buying. We're going to just go ahead and jump into the charts for a little bit. I like to always talk about the charts for a little bit, but before we get into the charts, let's just go ahead and jump into, let's see what the fear index is before we get into the charts. Look here, guys. There it is. I tell you all the time. See, America's fearful right now. Yeah, they're sitting on the sideline. They're scared to buy. Look at that. This is where you make all your money, young adults. Yeah, when the country's in fear. Our fear index today is 39. Y'all see that? Hmm? 39. This is June 14th, June 12th, somewhere around there. Yeah, the country's in fear. This is the time to buy. I always tell y'all, buy when everything is fearful. And it has been for the last year or so, down here in the 30s. I saw it down here in the 30s, low 30s. Now it's been creeped up to about 39. The country's still fearful, okay? But let's jump into the charts. Let me show y'all why I think that this is a great buy. We're going to look at Meta, and we're going to go ahead and open up the charts. And if you open up the charts, you guys can see all this up here. Let's go back a year ago. 1 year ago, I said Meta was up here at an all-time high of $558.28. That was a year ago, right after President Trump came into office, okay? That was a year ago, okay? Oh, there it is. There's a year ago. That's a year ago. Y'all see, I just clicked on a year ago. It was up here. Actually, a high a year ago was $587.83 a year ago. I've been following this. I mark this stuff every week. That's why y'all see so many live. But let's go back year to date. When I teach you guys about year to date means from January up to now. You can see that Trump administration was in power, and it fell down there from 787, 83. It fell down a year ago. I saw it at an all-time low. I marked it off back there at $520.26. That's when Trump had just came in there real good. 6 months ago. This is June. Okay, 6 months ago. Here we are. Saw another all-time low 6 months ago at $517.17. I marked it off on the charts, you guys. Y'all see that? That was 6 months ago. Now I'm starting to turn around and start bringing us up to date. 3 months ago. 3 months ago, we saw a different turn. It started to turn back around 3 months ago, and it went from 517 and it ran all the way up to $691.50. Y'all see that? Right there on the charts. That's just 3 months ago. But then it started its trajectory sideways, and then it started falling down. That was 3 months ago. Let's look at where we at a month ago. And then y'all saw the trajectory up there at 643 high, but then again, like I say, just 1 month ago, we see it just dropping all the way down. Yep, it ran a little bit up a little bit, but it came all the way down. Look at that, 1 month ago to, really, I didn't even mark that down. It fell all the way down 1 month ago to $557.01. I'm just gonna go ahead and mark that right there. Boom. Let's look at what we had 5 days ago. All right, 5 days ago, y'all saw the all-time low as $557 and 03 cent. This is where I think that buying needs to start happening. If you're a young adult, I recommend you start buying fractional shares. Yeah, you guys catch it down here, it's gonna be a good buy because you guys seen it at the top up there. Yeah, at almost $700 a share, but I don't think it's gonna. I think it's gonna turn around before Christmas. You guys gonna see this, and mark my word, y'all gonna see this bad boy start to turn around. You guys need to get in here. You see it up in the fives, anywhere up in the fives. Start buying you some Meta, okay? Let's look at what happened today. We saw it at the low of 557.01 a few days ago. We're going to crunch on today, and we see it. It went up to 560. It came up today, you guys, all the way up to, it ran all the way up to 574. Oh, a little higher today. It started the day off at, what is that right there? 574. Yeah, 574, guys. Still in the fives. I'm going to go ahead and mark that. Yeah, so we can look at that next week, huh? Boom, got it. Now, also I'm gonna mark the low today was 560, but look what it did. Look what it did today, you guys. This is why I think this is the time to start getting in. Boom. I marked 560 for a reason. 560.99, it was a low today. Y'all see it under 560? Grab that. Grab all you can get. Matter of fact, grab all you can get in the fives. 500 to 600. Buy fractional shares. You guys still got a little while long, okay? Because this bad boy went all the way up from 560 to 575 01, 576.01 today. It dropped back down hard early this morning. It came back up, tried to rally back up again. That's the second time. 574. It fell back down and it ended the day. Let's go ahead and open it up so y'all can see it. It ended the day at, y'all see them big old green candlesticks right there. Buyers came back in town. It ended the day at 567.60. I'm gonna go ahead and mark that so we have that for next week. All I'm saying to young adults, this is not financial advice, but why you guys can get Meta in the 500s, all the way up to 600, start buying fractional shares, because we saw it back here. Y'all remember a year ago, we saw it back here up at 700, and I had it marked off at $787.83. And since a year ago, it's been fell all the way down into the 500s. But now I think it's starting to turn around. And this is a good time to start getting it. Y'all get it down there anywhere in the fives. Buy fractional shares. And by the end of the year, this bad boy, I think it's going to be over 600, maybe heading towards 700. And if it breaks $787 in the next 6 or 7 months, which it possibly can do, it's on a trajectory into the $800s and $900. So this is the time to buy. Why America is fearful. See that? America is fearful right now. They're scared. Yeah, they scared to put their money in Meta right now. I'm already in, guys. I'm just gonna keep doubling down, buying fractional shares, keep building out my portfolio. Meta is not a company that I need to worry about going out of business because they're worth billions of dollars and they got billions of dollars in cash sitting on the side. And the country's in fear. But one of these days, guys, pretty soon, the fear index is going to turn to greed. And then it's going to get real greedy over here. Yeah, as that market starts to run. You guys gonna see a totally green, some totally green days. And when those green days hit, yeah, we're gonna start selling off and putting money to the side right over here because it's gonna crash back and down. The market goes up, the market goes down. I teach you guys to buy low, sell high, but only invest in billion-dollar companies so you won't lose your money. You just need to be patient. Talk to you guys soon. I love all y'all. This is just food for thought. And if you like these type of videos, you know, subscribe, like, share them out to your friends so we can build a community of young investors. Because I believe if you guys are 16 years old now, you can download a Stash app on your mom's phone, a Robinhood or whatever, and start investing now. And when you turn 18, take all that money and put it into your own phone. And by the time you guys are 28 years old, I believe you guys can make $1 million. Huh? You can have $1 million in your portfolio in 10, 12 years. Talk to you guys soon. I love all y'all. The stock man, fool. Yeah, baby. I love it, I just love talking to you guys about the market. I just want you young people to start believing and quit being scared to put the money in the market. You guys can go without McDonald's and put the $15 in the market. Go, don't buy the Nikes all the time. But put some of that money in the market. Don't buy the Gucci bag. Learn how to invest in yourself. And you guys learn now. You guys be the next millionaire. Love y'all.